Okay, so we have some stuff to talk about. Really interesting day in the market today. Uh, we put on overall gains in the market, which was not necessarily unexpected, but you know, given the movement in other assets, I mean, the S&P finished down 0.04%, but the Nasdaq put on a gain of 0.87%, and so I mean, call it a flat day, call it a mixed day, but S&P flat, Dow fell 0.6%. Given the other mechanisms present here, if you had told me the 10-year yield would, well, go down significantly, almost 6 basis points, 1.522, although it was down at 1.45, so it cut its losses in half in terms of the yield. Obviously, this means, when the yields fall, the prices on the bonds go up. But if you told me the 10-year yield was going to do that, the dollar was going to have a knee-jerk higher to nearly 92, and oil was going to put on a loss of 1.5% down at 71 a barrel, I would have guessed the Dow would have been down at least 400 points, double what it was, and I would have been surprised to see, honestly, gains anywhere for the stock market. I mean, the Nasdaq, it makes sense to outperform on a day like this because it's less dependent upon, say, higher rates for the banking sector or oil, for the energy and the financial sector. So that makes sense, but these are the three things that we want to see. We want to see the dollar lower, we want to see oil higher, and we want to see the 10-year yield stable. Pretty much none of those things happened today, yet we had a mixed market. And there's two ways you can view this. You can say, oh, these things are signaling further downside for the market, and I've been trying to process this all day, and honestly, I really don't know. I don't know. I'm still a bull in this market, and there are a number of things that went up today, PayPal being one of them, something that was sent out in Gregory Marino's newsletter to buy a couple of days ago. But JP Morgan put on a big loss. And of course, gold and silver fell significantly during the day. And the actual gold and silver price didn't change much from my earlier video today, but a lot of the miners that I own did put on losses, and I added to some of those today as well. But these are the three core things, and to me, it's really a sign of how invincible this market is to falling. I mean, part of the reason is we got all this negative economic data this morning, and this is the conclusion I came to. We get the negative economic data. That's an excuse for the Fed to inflate more. So my best guess at what happened today would be that even though the 10-year yield fell, which means cash is flowing into the debt market, my guess is that the Federal Reserve printed quite a lot of money today and bought up bonds, and the people that got cash from those bonds went and pumped up the stock market. Okay, and do I have evidence for this directly? No, but what I do have is the reverse repo amounts for today. So the Fed accepted $755.8 billion in reverse repo operations, which means people are sending the Fed money because they don't know where else to put it, and the Fed is giving them pretty much a 0% interest rate, some sort of return on it, whatever. That was up $235 billion in one day. Yet cash didn't really flow out of the stock market all that much. A lot of cash flowed into the 10-year, and a lot of cash flowed into the dollar. So why would the Fed be doing a absolutely asinine proportion of reverse repo operations? Well, there has to be cash coming from somewhere. So my guess would be that the Fed was converting, they were printing money today and handing it off to people who then maybe went back to the Fed to get the reverse repo or went and bought the stock market. And that's a bullish sign for me. Another big bullish sign, though, is the fact that the 10-year yield ended so far off of its lows of the day. I mean, it was getting into somewhat concerning territory at 1.4 1.45. That was a spot we hadn't been since pretty much February. But now that we're back up at 1.5, it's stabilizing. It was starting to get a little concerning there. And so overall, I am not concerned really about anything in this market. I don't think there's anything to signal the Fed, is reversing policy here. These things just take some time to digest. And look, so we cover the market. I mean, not a lot of news today driving the market, but let's get to gold and silver because I talk about them a lot and I own quite a bit of them, gold and silver stocks and everything. We need to understand that this was a totally rigged day, okay? I don't look at the volume numbers. I don't need to look at anything to understand that this was a rigged day. I mean, you can just see gold down 5% on what? Okay, if the market was really scared about an interest rate hike, it would have fallen much, much more. Much, 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 much more. And not only that, but if the Fed were really tapering and really thinking about an interest rate hike, why did we see the 10-year note fall so much? And why did stocks not close lower? Because normally you would see if the 10-year is falling, it's a fear reaction, and then that's money coming out of the stock market. But no. None of that happened today, and that's why I'm not concerned. There's signals here that you can look for to say, this is what's really going on. It's just a managed market. It's just a fake market. It's just a rigged market, and we're working with that. It doesn't mean every day is going to be beautiful, and I can't lie. It hasn't been beautiful for me in the last couple of days. But it doesn't mean I don't think this is opportunity. It doesn't mean I'm selling all my gold and silver. I mean, what? That would be absolutely stupid. And so they shorted gold and silver. They created fake gold and silver to rig the prices to the downside. And there's just, this is J.P. Morgan. They've been convicted of it before, and they've been convicted of rigging the treasury markets as well, which are rigged to the highest order, the debt markets across the world, all in concert with the central banks who are printing the money that allows the system to be controlled in the way it is. And that's that. But I also wanted to get to a little more about gold and silver and this endgame that we're talking about, because this is the thing. The current market dynamics that sometimes drive gold and silver, like sometimes people say high interest rates are worse for gold because you get a better return on a 10-year note or whatever note you're buying, and so why would you buy something without a return? Well, the 10-year yield fell today pretty substantially, and gold and silver also put on huge losses. So that narrative doesn't really make a lot of sense. And so gold and silver, I mean, they're just rigged, and the end game is higher for them. I don't care if interest rates go up. I don't care if interest rates go down. I don't care where the stock market goes. Gold and silver in the long run are going higher, much higher, multiples higher. And when I say long run, I am talking about years. And one thing I did today is I opened options on gold and silver expiring in 2023. So I'm going out a full year and a half for these things, to really cement my risk, in a lower place, rather than doing a couple months out. I mean, I have stuff in January of next year that I've been incrementally adding to, but nothing crazy, like no August, July, or September stuff, and even October, November, December. I've had one position that's in October that I have closed out previously in the last couple of weeks or so. So long-dated options, and I guess I should probably explain a little more about why gold and silver will go up no matter what. It's because all of the money has already been created that's necessary to push gold and silver to those prices. There's no further inflation that's needed to push gold, silver up multiples. It's really sick how they manipulate these prices, but you just have to understand that gold was at, say, around 2000 in 2011. Silver was at $54 in 2011. Okay, and that was when the Fed's balance sheet was less than half of what it is now. Matter of fact, it might have been a third of what it is now. And that, inflation in terms of the money supply was at way, way lower levels. Yet gold and silver especially silver, are way lower than they were back then. I mean, silver's half of what it was back then. So if they crash the system tomorrow, we wouldn't see gold and silver, completely fall off the cliff. In the end game scenario, they are the assets that you're going to want to own. Gold, silver, and cryptocurrencies, in my opinion. Okay, so don't worry about the end game. You will be fine in the end game no matter what the dynamics, no matter what they tell you is driving the price of gold and silver and cryptocurrencies. Now, it's interesting. Let's get to cryptos. That cryptos didn't fall under more pressure, but they've been traditionally viewed as more of a risk asset. So they finished mixed today. Bitcoin definitely put on a loss, but it's at 38,000 just about. I mean, nothing really there. And again, considering the gain that the dollar has put on, I think cryptos are performing remarkably well, and I think they're set up to go considerably higher here. There's really not much more to say. I love all of the assets that I'm in, and really I view days like this as massive opportunity. I've said it before. I will not stop saying it because we know the end game. If you're getting scared and going, oh, am I really right about this? Is this really happening? You got to know in your mind this is happening, and they're trying to convince me that it's not happening so they can take advantage of it more than I am and crush me into the dirt. All right, I think I've covered enough here. I hope you enjoyed this. Please hit the like button, subscribe button. It helps me quite a bit. And I will see you tomorrow morning for my pre-market report. Thank you for watching. See you later.